When's your birthday?
June 7th. We're all Geminis, all three of us.
Yeah, well, that's 3 Geminis walk into a bar.
Then what happens?
Oh, that's
That's more than 3 people, that's for sure.
yeah, that's 6.
Yeah,
6 people.
at least.
At
I
least.
feel I have a little bit more than 2 inside me, but
I think all Geminis have at least 2. Sometimes
least 2.
3. Yeah.
Yeah.
Like for Toby, there's like morning Toby, there's evening Toby.
which one's the best?
Evening.
Evening Toby? Why?
Oh, morning Toby's not a morning person. Do not run any major decisions by him. Everything's a dumpster fire. And then by like 3, 4 o'clock, then you can approach Toby with, bad news. But you can't do that in the morning.
Strategic.
Strategic.
How long have you guys been working together?
Since 2022. When I
Almost
first
4
got into
years now.
crypto VC. I didn't have some grand plan. I wasn't a crypto degen.
You were or you weren't?
I was not. No, I was working in Web2 VC at a biotech, aerospace, and AI fund in syndicate. For 2 of the biggest syndicates on Angel List.
How did you, what made you get into Web3?
Purely by accident.
Okay.
So-
Happy accidents or?
Yeah. That's a good one. No, I mean, basically, like I was, my career in venture started like 7 years ago, but I started working full-time in venture like 6 years ago. And I'm really good at writing, sales, and operations.
Writing as in copywriting?
Like writing investment memos. So I used to write investment memos for companies raising money through syndicates. And I got very good at that. And then I got recruited to another firm in SF that ran another big syndicate. And so I built a team of 10 people through an MBA program in the US. And then I was doing the operations of the company. And then my GP I was working with was like, we need to raise more for this next fund. And he was not good at raising money. And so then I went abroad to raise capital through a US ambassador program where basically it takes US GPs abroad to raise money outside the US. So then I went to Israel, Switzerland, and Dubai several times. And then I was good at that. And then that's when I met my former company I used to work at, where I met Toby.
Which was?
Blockchain Founders Fund, which we did like 160 investments in the space. And when he recruited me, I said, look, I'm not a crypto guy. Like I invested in Bitcoin 2018, like any investor as like an asset class, but like it's not my niche. Like I'm not a token expert or anything like that, but I'm very good at picking founders and working with founders and helping them scale their businesses to Series A. And I'm good at managing people. And so then I got recruited to Blockchain Founders Fund. And the famous story is I had a 4-hour meeting with that managing partner, and he said, I want to hire you, but you
4 hours?
4 hours. He said, I want to hire you, but you need to speak to one of my other partners. I said, who's that? And he said, Toby. And then the funny thing is when Toby and I met, because if anyone knows Toby on LinkedIn, it's just like his headshot. I think he updated the picture, but his old one is just like his head. So, an average person's, 5'8" to maybe 6 foot. And we're like standing at an Anthony Ratosa event in Dubai, like, hey, you here? He's like, yeah, I'm here. Are you here? I'm like, yeah, but like, we don't see you. And we're literally our backs to each other. And I see him and I'm like, Toby? He's like, Brent? And I'm like, wow, you're way taller than your LinkedIn picture, because he's like, what, 6'4"? And then, Toby and I had a meeting, then a night out together, and then, the rest is history. And then I quit that job, joined Blockchain Founders Fund, and then my first week on the job, the FTX collapse happened.
First week? Welcome to
And
the space.
And I thought, did I join the wrong industry?
Yeah, I mean, as you should.
Yeah. So going through that bear market was like my first experience like in crypto full time, working in venture, and that I think shined a light on our industry, but my views of crypto and seeing like the evolution now in 2026, where the industry's come, which was my original thesis coming in, because I was like, look, at the time I had no experience with tokens and raising money on tokens or, launching a token, right? Because I made that very, very clear. And so when I would look at companies to invest in, I was like, I don't get the token angle like when I started, right? And so I was like, I want a company that has real product market fit, because most companies in crypto, you ask, what's the problem you're solving? Basic fundamental Web2 question. You go to Y Combinator, crystal clear. This is our problem, this is our solution, this is our go-to-market, this is what we're raising. Like, that's what I was used to. And in crypto, I was like, well, we're going to launch a token. And I was like,
Why?
okay, but why? What's the product market fit? Who are your customers? And I was always vague, which as a Web2 investor, like, then that's kind of like, okay, I'm not going to invest in this company if he doesn't know who his own customers are. But then I realized in Web3 when I got in, I was like, oh, that's just standard, that's business as usual, right? And the reality is, like, coming from Web2 was like most LPs, they have a 10-year time horizon to get their money back. It's a very long time. And VCs have what we call paper returns. Like, on paper, it looks good, but there's no money in your bank. There's no DPI, as we call it. And so that's what brought a lot of LPs into venture. And that's why we're in a weird cycle, because a lot of funds the last couple of years have not done well because a lot of their investments were tokens. And as we all know, not a lot of tokens have done well. Or the ones that have done well, you're a VC, great. You have a 12-month lockup and 18-month linear vest. Let me know how that's going in month 14 of that, right? And so, like, the companies I invested in that fund didn't have a token, and a lot of them have done very well. One of them is actually a unicorn now. We invested in at the pre-seed stage.
Which one?
Credit.
That's the one that you mentioned also.
Yeah. I show him a lot, but I show him for good reason, because, like, he had a real go-to-market plan and, like, had a real problem, and I was like, this company makes sense, and
Real customers,
and does a lot of revenue, has millions of customers. And that's what I mean. Like, in our industry, like, you can build a big company, because, like, if you think about real world assets, TradFi space, banking infrastructure, like, there's so many layers that are so inefficient. Even till this day, it's like sending money from here to Singapore. Like, our companies in Singapore do a lot of business in the US, takes days, takes a lot of fees. Why is this not instant? Like, you know what I mean? Like, as a very basic use case that, like, still to this day is like, through crypto, yeah, if that company takes crypto, and yeah, if they can off-ramp it, which again, most businesses can't, right? And so, like, to me, like, I still think we're relatively early. And that's why, like, I think it's a joke when people say, like, oh, crypto is trying to be like Wall Street. And it's like, the whole narrative of crypto, since I've been in it, and then being in the space now for 4 years, is very antagonistic. Like, how much crap does AI get, right? Like, yeah, there's the doomsayers that AI is gonna take everyone's job, sure, but, like, people don't, like, make fun of it or, like, put it down, right? But, like, our industry in particular, there's especially with some recent events about things some events that we've done that,
what are you talking about?
exactly that, a lot of Web2 companies have held events at. And it's like, the reason is because it's attacking the financial infrastructure of the world. That means a lot of institutional, large banks, financial infrastructure will be disenfranchised. So it's like, okay, is it really because crypto hasn't grown up, or is it just because it's, like, going to disrupt the banking infrastructure?
Don't you feel, though, playing devil's advocate, that adoption has been really slow?
Yeah, but I go back to the Charlie Munger, show me the incentives, I show you the outcome. The incentives in the last decade have been to launch a token and make a lot of money. And a lot of founders have done, of course, very, very well. But when you, again, in the Web2 space, if you're a founder, you don't make money for a long time.
I had this conversation earlier today. I was talking about how something that I feel is wrong in Web3, more specifically when you talk about adoption, is that the incentives have been so wrong for so long, because people are so used of making a quick return.
Yeah.
Where in a Web2 investment, you wouldn't expect to make a return or literally recoup in 12 months. Like you mentioned, it's like 5-10 years, right?
Mm-hmm.
You have a long-term vision, but crypto is, I need my money back made within 9 to 12 months. Otherwise, it's not worth the investment. It's like, why did we get so used to a quick buck? I
mean, crypto early on, if you're an early investor in Solana or Ripple or Sui or XRP or Ethereum, like a lot of, and this is like I don't know, call it a controversial point I have, but a lot of people.
Now you name dropping everyone except the place you're in today.
I'm trying to be friendly, you know? Yeah, but it's like if you made a lot of money, call it trading, and then became a VC or like a founder because you made money trading, it's a different skill set. And that's like another problem in our industry. It's like just because you made money early investing in a chain or a token doesn't mean you know how to run a company or
Fridge.
invest. And that's why like we're at a stage now where like kind of all the majority of the scammers were like out because at this stage, like, yeah, it's very hard to launch tokens, very hard for that to do well. It's much harder to raise money. And like our industry is maturing, which I think is a good thing. That also means a lot of companies are going to fail and go out of business, but that's like the lifestyle cycle of like any industry. So to me, I think we're in a very opportune time to invest and build. But a lot of people will complain. A lot of people will say, oh, crypto is still too early and it's slow to roll out adoption. But again, it's like, yeah, because the incentives weren't there. Now the incentives, in my opinion, are kind of like lined up where it's like, if you're going to build something now, like it has to be sustainable. You have to be able to get product market fit. You have to be able to like bring value to people.
Value.
Crazy. I know it's a crazy concept. So that's why like when I look at companies now, it's kind of like I look at it from like a Web2 perspective because in my opinion, I think the next 5 years there's already been a lot of M&A. There's been a lot of IPOs right in the US. There's a lot of crypto companies going public soon. And that will continue for the next 5 years because legacy systems, the TradFi industry is not going to build their own rails. They're not. They're going to acquire. Like they're not going to go build another, Aptos, a Sui, a Solana and try to make it like Chase Bank is not going to do that. Right? They're going to
That's funny because
acquire a company to do that.
I heard a lot of people's theory is that big enterprise or institutions will be building their own chain instead of using outsourced ones. You don't believe in that?
I don't believe in it. I mean, they might. I mean, it just goes back to AI, right? Think about AI right now. Who's built their own AI outside like the big 4 or 5 companies? Right? Like it's very, very few. And some big corporations have their own internal AI, but then they like white label from someone else, so they don't technically own everything, right? And like when you realize how much money it costs to build your own layer one, again,
to maintain
it is like and then you are not crypto native. So now you have to like go hire a bunch of crypto people to then build that in developers.
It's a big curve.
It's like, if you're a giant bank, would you do that or would you acquire someone for like $1 billion or 500 million?
Sure.
Like, and then from like a speed perspective,
it takes a while. Yeah.
It takes a while. So would you try to build this and try to build your own thing for 5 years, or would you just do an acquisition
of someone who's already out there?
Yeah.
Speaking of TBV's Portco, what are your top 3 companies right now?
In our portfolio? Well, there's a couple. I mean, as an investor, like, everyone's your favorite child. You don't have like one favorite child, right?
I mean, I don't believe in that. I think even parents have a favorite child. I think they say that so that the other kid doesn't feel bad.
Correct. How many siblings do you have?
3. There's 4 of us.
Yeah, I have 1. So
I am my dad's favorite kid.
Well, that's what he tells you.
No, everybody
and then
knows.
Your sister or your brother, then they're the favorite.
No, they know I'm the favorite. Yeah. So investors is the same thing.
Yeah, same. As I say in Thailand, same, but different.
So let's get into it.
I would say like our portfolio, the companies are doing very well. Kind of fall in 1 and 2 buckets, like the stablecoin infrastructure space. Like I mentioned credit, I mentioned BoomFi is there, and then like Animal Protocol is another one that's doing very well. Because again, like his business is Web3 Rails for Web2 customers. Cattle has been around forever. Farms have been around forever. And the way they raise money, invest it into cows, raise cattle, sell, auction, do all that is like very antiquated and very expensive and very time consuming. And if you can bring liquidity to farmers earlier, as a farmer, why wouldn't you do that? And if, as an investor, you can earn yield on real-world assets like cows that have stable, consistent returns over a long period of time, it makes sense. The challenge for these type of companies is you're a Web3 guy coming to legacy Web2 folks that know nothing about crypto. So of course, they're going to be skeptical, they're not going to get it. And that's where the storytelling, the vision, how you explain your product, your service, like really comes into play. And that's like the magic, I think, in our space is how do you simplify something that's very complicated into very simple words? And the best companies are able to do that.
I feel like a mistake that I've seen made in Web3 for the longest time, and still today, to be fair, is that people always try to explain the tech when you should really be explaining the value prop and the use case, right? Like, I'm not a technical person. I don't need to know how smart contracts interact.
Yeah.
I just want to know what it's going to do for me, for my customer, for my company.
Yeah.
And I feel like most people in Web3 have tried to always explain, here's how we use the tech, when it's like, no, I want to know how it's going to benefit me.
Yeah, no one cares about the tech. No one cares about your software. No one cares about your blockchain. They just care how does it benefit them.
Yeah, exactly.
I mean, it's as simple as that. Yeah, and I think that is some of the maturity part, maybe the growing up of like crypto, because now like it is so difficult to launch a token, at least successfully, that yeah, you have to be able to get product market fit sooner. And a lot more founders are doing safe plus token warrants. And yeah, tokens an afterthought. Maybe it's something we could do, but it's like, how do we get product market fit first?
Yeah.
You know what I mean? And so that's why like I'm excited about
Now,
this space.
more than before.
More than before. Even though like there are still, it's not saying like no tokens work, right? It's just more like right now from the deals we look at, there's much more serious builders.
Yeah, and it's more, why are you launching a token?
Yeah.
Is it going to be actually useful to your users?
Yeah, in the US, like, you know, legislation like the Genius Act and stuff coming down, like that will open the door for more opportunity, and like crypto's here to stay. You know, it was always like like in San Francisco, it's like and you have red hair, but American expression is like the ugly redheaded stepchild, which is not about you. You're beautiful. There's not about you. I'm saying an Americanism.
That's a saying?
That's
Damn,
a saying.
I'm so offended now.
Wait. Have you never heard that?
No.
That's funny. Yeah. Well, it's okay. You're French, so.
Well, still the red-headed.
But some redheaded people, it's
The
like
ugly red-headed?
stepchild. Yeah.
That's horrible.
I do that extreme example but that's how crypto is kind of treated, right? I mean, if you.
I can't believe you just said that.
If you do something, you wanted me on. I told you.
Please be truthful.
Yeah, I mean, just like if our industry just gets a lot of flack if we do anything, and like, yeah, like that's how I would say crypto's been treated, right? People would go to jail the last couple of years in America if you held crypto, if you traded crypto, and everyone's very hush hush and behind PFPs, because you kind of had to be. And it's like, why is that if it can be regulated properly and people can pay Uncle Sam his fair taxes and all that? Like, it should be treated like anything else. And like what I'm very curious about is the next 10 years, all these countries' currencies are like not doing well. Like I'll just ask you, in the next 20 years, do you think, especially countries that are like outside like the West, and you can even include the West as an example, but like, where do you think currency valuations are going to be going, up or down?
Down.
Yeah. No one's like, I think I mean, there's so many examples, but like the Iranian or the Iranian rial is gonna like all of a sudden go up, like, and be up for like a extended period of time, right? And even forget about the war right now, but it's like most countries, especially in Africa, the Middle East, South America, you know, Eastern Europe, and like some places, it's just like the currency instability is like a massive problem. And like people will continue, like in Turkey as an example, to put more and more of the money into stablecoin, which means there needs to be more and more infrastructure around the world for stablecoin infrastructure, payment infrastructure. I look at Brazil as an example, like during COVID, right? They put basically everyone on blockchain for payments. That's like one of the best payment infrastructures in the world. done in real time through a government, which is pretty unbelievable. So to me, that's why I'm like, I don't know, I think it's a great time to be looking at deals. It's a great time to be like building a company, but a lot of people don't want to hear that. It's not sexy. It's not, I get to make 1,000x in 2 months and I get to have a Lamborghini.
It's more of a TradFi business, really.
It is. And that's why, like, from a return perspective, the returns can still be very good.
But they're going to be on the longer term.
Yeah, it's not going to be probably a 12-month, 24-month return. But if you're an investor, it's like, okay, well, what's your return on AI investments right now? What are even the moats in AI? How can you even have a moat building an AI company right now? Unless you have, which when I worked in AI investing was more around the proprietary data that you can get, which is very hard to do, right? But that's usually with partnerships with like big companies that will give you their data in exchange to maybe acquire you one day. That's like a whole nother topic, but that's what I mean is like now's like a really, I think, interesting time.
When you're getting pitched or speaking to founders or looking at investments, what is the first thing that you look at in order to have a good indicator of whether or not you should invest?
Do they have red hair or not?
Is that bullish or bearish?
Bullish.
Okay.
Yeah.
Despite
So
being the red-headed ugly child.
If they, no, that's not you. That's the first thing I look for. No.
Damn, fuck yes. How much money am I getting?
I know, right? I mean,
how much money am I getting?
A cut. We're gonna get you a juicy cut.
Yeah.
Yeah, and like, I mean, I always tell founders. I mean, I've seen I don't even know how many tens of thousands of deals. A seasoned investor can read your deck and blurb in 60 seconds and know if the deal's decent or not.
Okay.
And the first step, even before that, is how did you hear about the deal?
So the source.
Yeah, like who sent you it? Is it your VC friend? Is it a DM on X? Is it a DM on LinkedIn? Is it a cold
What's
email?
a red flag?
What's a red flag? I mean, there's a lot.
Give me a couple.
I would say my top red flags are gonna be, I mean, I wouldn't say like, okay, so there's like red flags and there's just like bad decks, right? Or like bad blurbs or like.
Let's put them in the same bucket.
Yeah. Okay, well, okay, I'll say this. Outside like just horrible decks and horrible pitches, the biggest red flags when founders are insanely like overconfident and they don't have any prior experience. Alix Musset talks about this a lot, about the curve of being an entrepreneur. And in the beginning, especially if you're not experienced, and by experience, it doesn't mean you have to go to Harvard or something. It just means, have you built a company before? Have you hired people? Have you raised money? Have you done all that? Because I weigh that heavily. Not that first-time founders can't build successful companies. Many have, right? But on average, most successful founders have had multiple companies and multiple failed companies. So when you talk to like these type of founders, it's like, yeah, they have a big vision, but they're also hesitant on like parts of their business of like I want to raise this money because I want to go after this. There's obviously a high chance of failure, but like we're gonna go and do it anyway. Like they understand the risks. The founders that I hear that are like, everything's great, everything's amazing. This is gonna be the biggest company in the world. This is going to tokenize $88 trillion in assets. Those are the founders I roll my eyes at. I'm just like, and I always ask them, like one of my questions and part of our diligence, I go, have you ever raised venture capital? And 99% of the time, they always say no.
So how do you balance, you hear all of these inspirational talks about you need to be delusional about your success and you need to be delusionally confident and all of these things. Bullshit.
Is this about dating or about building a company?
No, building companies.
Because I think like raising money and dating are very similar.
Okay.
And let me explain.
I am letting you explain.
Because, and I think Jeff Bezos said it best, it's have a vision, but be fuzzy on the details.
Okay.
Right? Like you can have a vision of where you want your company to go and how much you want to raise and how big you want this to be and all this. And just like maybe you have a vision for what maybe your wife or your husband like is, but like don't get fixated on that. Because you don't know how long it's going to take, how soon it may happen. Most companies change completely from their seed to Series A. Many. I mean, look at like Airbnb, go to Twitch, go to YouTube. All these companies were like way different than like what they are now. Way different. Because you're just trying to get product market fit. You know what I mean? And that's why like people that are very delusional, that are like, I want to build a big company, I want to raise all this money, I want to do this and that, and it's like, because if you've actually built companies, you realize how much time it takes, how hard it is, I mean, like Elon Musk says, it's like building companies sometimes is like staring into the abyss and chewing glass. Like, it's not pretty, it's not glamorous, it's not. There's many days you're gonna hate your life. Like, it's actually horrible. I actually tell most people,
nightmare.
don't even start a company. Don't. I mean, unless you.
I think you've said that to me, actually.
Yeah.
Do you remember?
Yeah, I told you that. Because you said you wanted, you were thinking about starting a company, or maybe down the road start a company, or do VC or whatnot. I'm like, unless you're a masochist. Which I am. Yeah. So then you have a good shot. No, like you have to really.
What did I respond to you when you said, why would you want to do that?
I think you said confidently, like, yeah, I want to do it.
I said, yeah, so what? I'm gonna do it anyway.
Yeah.
And you were like, okay.
Yeah.
So does that fall into overconfidence?
Maybe a little bit. Hey, you have red hair. You should be confident.
I am.
Yeah, I mean, like, everyone should be confident, but it's more just about maybe the emotional maturity of like, this is going to be a rough road. Anyone that tells you it's easy has never done it.
Bullshit. Yeah.
Is full of shit. Time away from family, from friends, missing birthdays, missing holidays, not working out, not sleeping consistently. I mean, I could list all the negatives of running a company.
So if the founder is overconfident and doesn't seem to be cut for it.
Yeah. You want to hear another red flag? Here's another one. Yes. Just to go on to that point. Founders that don't want to travel.
Ooh. But that's specific to crypto, no?
But even in Web 2, like, let's say you're building an AI company, you went to Y Combinator, and you're in San Francisco. If you don't think you're going to be, like, maybe you can do that pretty much just in the US. You don't really have to leave the US much. But to say you won't be going to New York, Miami, Austin, going to meetups, events, networking stuff, you're out of your mind. Our industry is much more like international, right? All of our big conferences are all over the world, and that's where you get to reconnect with people. Like, you have to like do that, right, if you want to stay relevant, but you have to be on the road a lot.
So another red flag is if the founder does not want to travel or does not plan on traveling.
Correct.
How do you know? Do you ask them?
I asked them that. And then my next question is, where have you been the last year? Tell me, like, what stuff have you gone to? How have you built your network?
Interesting.
I can usually sniff out BS in like just a couple of very simple first principles questions.
What's another red flag then?
Complaining.
About what?
Virtually anything, but in particular investors. Like, I've had founders, like, they reach out to me and they go, I could get this done, but investors are just hard to deal with. They don't get it. They don't understand. Like, that type of behavior is just very weak, and it does make me want to bet on that founder.
That looks like something that will lead to the person never being accountable. Yeah,
accountable is a part of it. Like, as the founder, like, you take accountability for everything. So if your customers don't get it, investors don't get it, that's your fault. That's someone else's fault, it's your fault. And I think most people when they're starting a company get that, but like some people that, and maybe they're tired, and maybe they're just like, I'm over it. But like, these are like this is what I mean, like when founders talk to VCs, they think, because like we have obviously a lot of friends, a big network, people come and hang out with us whenever at our events, and they don't realize, like, if I'm with them, I'm also kind of judging them.
Of course.
Yeah, but they don't act like they think we're buddy, and And I'm buddy with people. It's not like I go talk about their secrets, but it's more just about if you come back to me in like 6 months, like, hey, I'm raising for this project and like, this is what I'm doing. And I'll be like, I remember, like in my head, I'm like, I remember when you were complaining about stuff or you were like, just like your head just not like in the right spot. Like when Toby and I started this, like we knew this is going to be a rough road. Running an events company with a venture fund, which I told our investors when we raised our first round, was like, I tell so many founders, don't do too many things at once. You spread yourself thin. You only have 80 to 100 hours a week. You only have so much money. You need to be very focused. And that famous quote from Bill Gates and Warren Buffett, they were at a dinner like 30 years ago and someone said, what's the key to your success? You know what they said at the same time? Focus. It is so goddamn hard to focus.
It is.
It's so hard.
Especially nowadays. It's getting worse.
Social media, people wanting to be influencers, traveling. It is, if you can be focused and disciplined, you're ahead of like 90% of people.
Discipline.
Yeah, I'm a big fan of Jocko. I've listened to a lot of his content, read his books. Yeah, like discipline equals freedom, right? Like if you're disciplined, that will equal your freedom later. If you're just distracted, doing all these different things, and you have the shiny ball syndrome where, oh, new ball, being a golden retriever, oh, ball, this, that, right? And some of the best founders of all time have been very much like that. Like someone else I know that I work with. A lot of ideas, got to do this, and this. But at the end of the day, you have to rein it in to like, where are we really headed and what is going to get us there?
Do one thing really well.
Yeah, one thing, maybe two. And that's why for us running an events company and a venture fund is a day-to-day struggle of balancing those two things and being great at both.
Yeah.
Luckily for us, they're very synergistic because for us as a fund, like our thesis is, we have a couple, but if you're raising a Web3 fund today and you don't have a community and you just have capital, what other value are you really going to bring founders? Unless you're doing something else. Like if you're just like I worked at this big company and I spun out of this and like now I'm investing. Okay, how are you gonna support? Why are founders gonna want your money? Maybe
what's your value? What's your value add?
What's your value add? Which is like a joke on Twitter about VCs with value add, and it's all bullshit. And I would agree with that. 90+%. I mean, I worked at funds where the GPs I work with were like, I write them a check and they send me investor updates and that's it. It's not my job to help them raise. It's not my job to help them hire. My job is to give them money and that's it.
Some founders are looking for just money.
Yeah. And to be fair to a lot of founders, I think you should take some money from people like that.
That are not gonna be in your ear, really.
Yeah. Do you really want someone up your, you want to have 20 investors up your ass every month about what you're doing? No. You're like, hey, just give me the money, send you updates, whatever, right? But like if you're a fund one trying to build a name, build a brand, that is not a recipe for success in my opinion, especially with AI now. I mean, like, what's the value add you're going to bring? So for us, it's like very clear. It's like we run a big events company. We have a lot of connections. We have a lot of people that come to our stuff all the time.
So network.
It's a network, and you can't AI a network.
Yeah.
You can't AI
That's why
relationships.
I think that's going to become more and more valuable. Right.
Yeah, it's like the anti-AI portfolios. And there's some funds that just invest in things non-AI that AI can't affect.
It's funny. I always ask founders, how did they meet? I ask them individually. I asked you that.
Mm-hmm. Hopefully our answers are similar.
Yeah, well, your answers are more contextual too, right? It's like, here's was the situation. But yeah, but I always ask them and they're always very surprised that I ask. It's almost like, what would you need to know? I
mean, to me, a founder relationship is almost as intense as like your partner, your boyfriend or girlfriend or your future wife or
you're going to
husband.
be together every day. You're going to disagree. How do you deal with communication and arguments?
There's ups and downs. There's arguments. If you're not arguing on a consistent basis, there's probably something wrong.
There's budget management.
There's money
Similar
involved.
to a relationship.
There's stakes. Yeah, there's just, there's not the, other part of it. But I think it's...
Like what? Like what?
Yeah, but I'm saying it's just as intense. Yeah, the
The what?
good times. Yeah.
Oh.
Yeah. But like, and that's why people that like are married and they start a company with their partner, I'm like, dude,
That's
hats off.
dangerous.
Hats off to you.
Dangerous.
I mean, there's been examples of people that have done that, but I'm like,
But I was telling you, like, it's dangerous. But I want
yeah,
a
you want
homozy.
it.
Yes.
Went a little toxic, we just work.
No, I
and
don't want
hang
it to
on.
be
Yeah.
toxic, but I think
I just think it's so hard because you work so much, and then when you're not with them or when you're not working, you're still talking about work together. I mean, I don't know. I mean, I can see how it could be beneficial
yeah.
because then you're really working 24/7.
Yeah, there's pros and cons. I mean, will that ever happen to me anyway? We don't know. Probably not.
I think it will. I think you painted a future, and like now
We'll see.
Yeah.
I'm not really focused on that.
you focus on a mission,
Yes.
on a mission of mercy.
I'm focused on building my own thing first.
Yeah. Well, look, I'm glad we met in Bangkok.
Yes. I said, "Where's Brent? I don't even know what he looks like."
Yeah, so I mean, we've hung out in how many different places now, and that's part of crypto and trust. And
But you know what you were saying earlier in like you see people that are your friends or like acquaintances that you've been around and you see them complain and then they ask 6 months later they say they're raising, right? It's funny actually. I think it's also because of the way I look in the fact that I'm a girl and I'm not someone who's under gender warfare, like I wouldn't care less about that. But I think people put their guards down a lot easier around you when you're like this. And I've been around so many partners or people who want to become partners or asking for anything. And you're around them at side event and they get super drunk or you see the way they interact with girls, like, and they don't think twice that you're observing. And I have
yeah,
said no to people because I've seen them act or because of a conversation that we had unrelated to work where I was like, you're outrageous.
yeah. I mean, I think a general just friendship, investing principle with like people, because we're in the people business, right? Is like if you spend more time with someone, you're either going to like them more or less. It's never the same.
It's not only about liking, I think it's about
Yeah, and by
respect, like the way you see them.
yeah, liking I'm saying comes as like respect. Maybe you enjoy. And look, there's people I'm invested in that I don't really enjoy hanging out with them, but I respect them.
Yes, exactly.
And maybe their personality is a little brash, but like I respect what they do.
Yeah.
I respect the hustle. Do I want to have a beer with them? No. And not every founder I need to invest in us to have a beer with or a coffee with.
But they're
like
respectable.
after investing. But like, yeah, it's like I get like they're not crazy.
You're not a weirdo.
They're not being weird. They're not being weird with girls. I mean, we host events. And I see guys and they interact with women, and there's been people that have been inappropriate. I've had to kick them out of our events, and that's why I'm always sober, because I'm like, we host the event. Like, I'm not gonna.
But it's funny because I've had a lot of people act crazy around me.
Yeah, people just think whatever, but because our industry, like the personal and business gets blurred because events are fun and they're social, and most 90+% of people can handle themselves like very normal people. But that's what I mean, like. 6 months later, some people I'm like, dude, I've got to know you more. You're awesome. I want to invest.
But see, self-awareness again.
Yeah. Which in our space is very low.
Yeah. Red-headed, ugly stepchild.
Red-headed, ugly stepchilds are beautiful. You can follow us, The Best Event, on X, on LinkedIn and Instagram. And you can see us in Istanbul Blockchain Week, CoinFest Bali, Token Singapore, Korea Blockchain Week, DevConnect Mumbai, and yeah, founders building interesting stuff in the space. Always happy to chat with. Thanks for having me.